Hello Stock Valley followers. In this video, we will talk about Pfizer stock with you. Pfizer stock had most recently fallen to the $19.50 level last year on April 9th. With a recovery from there, it had gone up to the $28.77 level this past April 2nd. And as of now, we are seeing profit-taking sales coming from here. The stock, which pulled back to the $26.18 level last Wednesday, April 29th, made its closing yesterday at the $26.70 level. As you can see, we see that there has been a horizontal channel movement for the last 2 to 3 months. It is exhibiting its movements between the $26.20 levels at the bottom and the $27.88 level at the top. This margin range corresponds to about 6%. And within this range, as you can see, the stock goes down, goes up, goes down, goes up, performing its horizontal movements. The positive thing is this: as you can see, we are going above the moving average. This shows us that there is an uptrend, which anyway, when you look at it, it is clear from here that there has been an upward trend for the last 1 year, like this, in this way. Let's also take a little look at the general outlook. Actually, from where did Pfizer fall to here? Pfizer stock fell down to here from the $49 level, that is, since the year 2021. As you know, the reason for this is that Pfizer is a pharmaceutical industry company, and with the rally brought by the pandemic, look, from the same levels we tested again at the March 19th level, on March 19, 2020, from the $19.70 levels, it had suddenly gone up to the $49 levels. With the easing and ending of the pandemic, the stock has actually fallen into the normal range, which is between the $31 levels at the top and the $19 levels at the bottom. Pfizer is not actually a stock that moves very differently, as you know. Generally, if we take $21 as a base for the band range, it has a 30% movement between $21 and $26.27, which anyway, it doesn't do easily or quickly. I mean, the range we have seen in the last 1 year, as you can see here, has already provided a 50% return within 1 year, from the 19s. Probably something like this might happen after this in Pfizer, if the profit-taking sales gradually become harsher and it pulls back to the $25 levels. From here we will go down to the $23, $22 levels again, and from here we can continue to draw like a sine wave in this way. If a very tremendous movement occurs, which anyway, look, when we look at the weekly chart since February, it has come to the 200-week moving average. We see that it is stuck there right now. Perhaps if it exhibits movements above the 200-week moving average, we could see a rally upwards again in Pfizer, but if these sales come downwards, then it could be troublesome, as we said. We could retreat to its levels, which are at 25, 22 again. Let's also talk a little bit about this. If there are any who don't know at all, technical analysis shows us this. Look, when it falls at the bottom during those weeks, this is a weekly chart by the way. Friends, when it falls down on the weekly chart, there is a reaction, as you can see. There is a wick at the bottom, but when it goes up, there is also a wick at the top. So people, as we said, with this 6%, 7% movement, are frankly trading to realize profits. As of now, the situation for Pfizer is a bit in the middle. Let's see what will happen and what will end. We will watch and see these together. Hope to see you in another Stock Valley video. Goodbye to you all.